Socially responsible investing is gaining more traction during the COVID-19 pandemic and as the world confronts racial inequities. ESG, or environmental, social, and governance factors, help investors screen potential investments in companies. Flows into U.S. and Europe-listed ESG funds for the year have already exceeded 2019 figures.
Investors have begun to see and identify that the best governed companies, the ones that are protecting the environment, and especially the ones that are very conscious of their social issues and their human capital issues, have outperformed.
Stay-at-home orders around the world kept people off the roads and cut carbon emissions more than any other event in the last century.
From 2006 to last year, we reduced our footprint by 15%. So by 2030, we're going to try to reduce our footprint by another 15%. I think we've got a good line on how to do that.
Impact investing also looks at diversity. Corporations began pledging efforts to close the racial divide after the killing of George Floyd.
I think COVID is going to elevate, and the associated large issues around racial inequality is going to raise a whole issue of S. And so I believe the demands on public companies, public boards and CEOs, hopefully private companies, are going to be all elevated.
Black directors make up only 1% of board members of S&P 500 companies, and 37% of boards don't have any black members at all.
We need to incentivize boards to increase diversity. We need to incentivize CEOs to ensure that their C-suites are diverse. And we do that because this is a market, and market has investors.